Oh, you may have noticed, but Tesla seems to have a 180 problem. No, I'm not talking about turning around in a 180. It seems like it's having trouble breaking through 180, and this morning is no exception. It's in the green so far during the first 10 minutes or so, but it is, bouncing against that 180 and having trouble getting through. We'll see what happens during the course of the day. All right, we've got a lot of news today. It goes without saying that Elon and his team have a new level of confidence in solving FSD 100%. Well, that also applies to almost everyone who's driven version 12.3.1, and now some people with 12.3.2. The confidence is going to turn into sales and profits in quite a few different ways. I thought I'd list a few of the ways. Maybe you've thought of this, maybe you haven't. First of all, here are the immediate revenue streams that will come from FSD being complete or near complete. Number one, more uptake of full price and subscriptions in Q2. So we're already seeing probably some evidence that there's going to be some increases in the number of people. But of course, the thing that Elon is doing with requiring people to take a drive with it when they pick up their car, a new car, or even when they pick up their car after service, that's obviously going to create some new subscriptions and some new people paying full price. Number two, more purchases of autos as the word gets out. So if your car can do this miraculous thing of driving itself, some people who might have been considering another EV or even an ICE car might decide to buy a Tesla instead. Number three, profits that are not yet booked, because you see there's 2.3 billion or something like that of profits sitting on the books that have not yet been realized because the FSD was not complete. Kind of like when you take a subscription on a magazine, the people you pay that $10 a year to, they can only take 1/12 of that each month. Well, you got the same thing here. They can only take the portion that they're actually delivering, and that's how the accountants have looked at it. So there's a bunch of profits coming eventually once this thing is solved, and maybe even now, maybe even in the first quarter, because there's more of a solution. Number four, new countries approving use. So if China, if Europe, even a couple of countries in Europe, the UK, Canada, well, I think Canada probably, I'm not sure about Canada. Yeah, I think they have it. They do have FSD, et cetera, Australia, as they approve FSD, and then FSD is rolled out in those countries, then you'll have more obviously sales and profits. Number five, more profits on each uptake when Tesla recognized the higher percent of delivery. So what I was talking about before, where there's this bunch of money that's being held in abeyance until the Tesla idea is complete. Well, if you buy a car today and you pay the full 12,000, Tesla only takes about 10,000 of that as profit now. Well, if they change the uptake amount, then each new car will also have more profit as people agree to take the full price, or if they take well, no, I guess it won't matter on the subscriptions. And then finally, six, licenses to other automakers. You may have heard last night, we had Nicholas on, and Nicholas said he thinks that this week there are right now other OEMs in conversations with Tesla about FSD because of what they're obviously being made aware of. You cannot, if you're in the business, you cannot have missed what's taking place this week. So FSD might have a high take rate among current owners, and this increase in take rate right now among current owners as they get a month to test it. You see, the current owners that are out there right now, these are what these are early adopter types, okay? Folks that are buying Teslas over the last 10 years or so, these are early adopters. They're also high earners because the price of Teslas have been and continue to be above 35,000, unless you get the very, very lowest cost one and you get the 7,500 off and you live in Denver. But for most people, they're paying 35, 45, 50 or more $1,000 for a Tesla. So these are early adopters, high earners. So the $200 a month or the 12,000 is more likely to be spent. Let's see. This would be some folks who use the car less than 10,000 miles a year might not be as anxious to do it. And this is why I keep saying, and now there's more talk every day now on X, people are talking about it. It should be by the mile, or it should be based on use cases and other different, we need some variations of versions of this thing. All right. 12.3.1 is rolling out now to all customers. We haven't got I think we got our 12.3 last night. We haven't had a chance to drive it yet. And, but 0.1 now is rolling out. 0.2 is now going out to employees. And as Elon says, the changes are coming fast. There's a massive 2.3 billion in unrecognized earnings. Remember that. That's huge. Okay. I'm sorry, this is from Austie USA. He says Auto Park has blown my mind. It's so smooth, accurate, and quick. And wow, the updated visualization is awesome. He can't believe it. Tesla Boomer Mama. Okay, this is something I actually sent her a note the other day asking her about this, and she said there had been no update yet, but now she's got an update on the case before the Chancellery in Delaware about Elon's compensation package. Here is what's taking place. On May 1st, Tesla will be filing its opposing brief. Not sure why they're going to take until then to do it, but maybe they want to use every available minute to do the study. I would think they do it early if possible. But I guess May 31st is when the plaintiff's attorney has his reply brief, and my guess is they would slow that down. So the plaintiff's attorney probably says, we're going to take all of our time. June 5th is a joint or separate orders filed, and then July 8th, final hearing and judgment with ruling thereafter. So somewhere around the middle of July, maybe we'll find out what's going to happen in that case. This is Randy Kirk. Did you know that? Tell your friends. Tell social media. Put it up on X. Just say, you should listen to Randy Kirk every once in a while, about once a week out of 20 programs. There's something that I get out of the program. Anyway, hit like if that's true, hit subscribe if you haven't done it already. And what is holding you back from doing that? And then hit notify, because of course, what do you got today? You got Walter Scott. Now, look, I've already recorded that program. I know what Scott's going to say. It was one of the best programs ever. Do not miss it. We're going to talk, oh my goodness, the stuff. Yeah, we're going to talk about what is AGI? What is AI? What is FSD? Why is FSD baby AGI? We're going to get into some really detailed stuff about that, but we're going to talk about, where are things right now? And it's a fascinating program. Don't miss it. And Jeff Lutz comes on later tonight to help me talk about Good News Wednesday. Anyway, it's always phenomenal to have Jeff on. And then join Patreon. Join Patreon. That is another thing. If you're getting some value out of it, $3 a month, $5 a month, $10 a month, come on, guys. Join Patreon. All right. This is from Sawyer Merritt this morning. He says this about Canaccord, Genuity's analyst. Actually, he's just reporting on that. They have reiterated their Tesla price target 234 and still giving it a buy rating. Says overall, we view much of the negativity currently surrounding Tesla as extreme, and the recent uptick in volume of negative and bearish feedback we have received regarding Tesla stock does serve as a barometer on how lopsided current sentiment is. Yes, the company is between two major growth waves, quoting Tesla, quoting Elon. Yes, earnings revisions have been nasty for some time. Our January post-deliveries note, Mind the Gap, discusses the multiple expansions in 2023 in the face of margin shortfalls, raises several pointed questions about the year ahead, and previews the coming growth slowdown. However, the issues of first quarter 2024 appear to be somewhat demand related, but mostly supply related. That means people may be mostly misdiagnosing current Tesla fundamentals. We estimate supply constraints may have cost Tesla 95,000 units of deliveries. I don't agree with that, by the way. I think that it was all demand. Well, I mean, sure, the Model 3 rollout was hurt, but not by 95,000. Sure, the Model Y in Europe might have been hurt because the Model Y demand in Europe seems pretty strong, but I think 95,000 units is a big overstatement. Also, with pricing in a better place, at least for now, could margins help set the stage for positive earnings revisions over the course of 2024 as Cybertrucks and also as Cybertrucks ramps? We'll see. So yes, I think that the margins are going to be stronger than people are expecting, and that is going to help, but not until the third week of April for that. We're adjusting our first quarter 24 delivery estimates down from 441 to 420, so they're low. And other people in that 420 range, of course. Actual investor expectations for a quarter are always tough to decipher, but we hear first quarter 24 delivery murmurings in the low 400 range. We are also adjusting our volumes from 2.08 million, just under 2.1 to 2.04 million for 2024. Our 2024, by the way, I think that these are going to be being revised up all year long as FSD. Just that alone is going to increase the total amount, and maybe dramatically, mostly due to an increase of our tax rate and OPEX adjustments. They're going to increase their gap estimate. Their gap estimate is going lower from $4.02 to $3.60. That $3.60 would be probably in the right range overall of what people are expecting now, but FSD could change that dramatically. Our price target of $2.34 based on gap estimate remains. All right, postscript. As we are working on this note, Elon Musk introduced Tesla employees to both instructed them to both install and demo FSD. Tesla will offer 1 month of free FSD. They're saying this razor blade approach in seeding the market with vehicles that are software upgradable with a high margin software. We see this potential catalyst for future penetration gains. However, we see additional price cuts as necessary for a material change in FSD penetration. Okay, let me go back through that again. They see this as a real good move. They also say, yes, Elon's method last year of lowering prices in order to get lots and lots of razor blade handles into the market so they can sell them razor blades later. Great idea, working, good thing, but they think FSD is too expensive. Why are people how can people not see the nuance necessary here? Really smart people are not saying, some people, again, are saying this on X, but I don't see these smart analysts saying you need a at least two-tier system, one for commercial use and one for just regular consumer use, and maybe 3 tiers, or maybe just by the mile. Just do it by the mile. That way, a person is using it for commercial use and they're putting on 40, 50,000 miles a year, they'll pay for 40, 50,000 miles a year. Somebody that's only driving it 6,000 miles a year only pay. I just think that's the easy way to do it. And Tesla has the information. Anyway, Meyer Thacker, one of our favorite ex-contributors, says this, and he's quoting Fresh HGIVA. Okay, the fact that Tesla slashed prices by 20% and is aggressively investing in growth at 2 times the rate of depreciation, yet still managed to produce $4 billion in free cash flow last year and built up a $25 billion net cash war chest, actually $30 billion, is enough to cover total expenses for 1.5 years. I guess his net is 25 cash versus what do you call it? Current payables and current notes payable. 25 cash war chest, enough to cover total expenditures for 1.5 years, is a downright miracle. I think we need to think deeply about what they pulled off here. Lots of talk. Oh, this is me now. I'm ending that story. There is a lot of talk right now that the delivery centers are extremely busy. So, you've got the $1,000 price increase coming on April 1st. You've got all this FSD chatter. You've got a lot of positive news elsewhere. Anyway, it's so busy and now they're adding a half an hour of work to the handover. Tesla's asking for volunteers to help out. What a community we have here. How many car companies could ask for volunteers to come in and help with deliveries at the end of the quarter? Okay, this is from What's Up Franks on X. He says, PepsiCo says its Tesla Semi surpassed 1,000 miles in a single day haul. That does not mean on one battery charge. All right, let's change to the general news in the economy right now. This is from Market Watch. This is an interesting story. Never heard of Claudia Sam before, S-A-H-M. It says that she knows a thing or two about recessions and how they begin. She's an economist and former Fed staffer. She created what she calls the SAM rule, and maybe some people are paying attention to it. It's a popular indicator that is considered the best and earliest warning system for recessions. By whom? It's like, by the way, this is considered to be the very best. What are they talking about? Okay, she noticed that recessions, both severe and mild, share one characteristic. They started when the 3-month average of the unemployment rate rose by at least half a percentage point from the minimum 3-month average of the previous 12 months. So that's a little complicated. You take the last 12 months, you chop it up into 3-month periods. You look at the very least amount that the unemployment rate went up in the previous 12 months. And then you look at the last 3 months and how much has it increased? Well, we've had that. It's slight uptick in unemployment in February's job report from 3.7 to 3.9. Immediately brought the SAM rule back into discussion early this month. Sizable downward revisions to December and January job growth, which some economists said resembled recession-type weakness, added to her concern. All right, this is from the Kobesi letter. He says, how out of control is U.S. government spending? Since 1800, there have been 52 countries that saw a debt to GDP above 130%. 52 countries. Out of those 52 countries, 51 of those countries defaulted. This is not a good. He goes on to say in a separate post, which I didn't write down or transfer. He said he's not suggesting that the U.S. is going to default, but it's worth paying attention to this craziness. Currently, the U.S. has a debt to GDP ratio of 124%, 124%, which is up 20% since 2020. The U.S. will be above the 130% threshold by 2033 based on the current trajectory. Now, of course, these trajectories can change and probably will change. According to the U.S. CBO itself, debt to GDP is on a track to hit 150% by 2050. Much can change between now and then. Meanwhile, a $1.4 trillion budget was just passed, and the debt ceiling is uncapped. There's no cap currently on the debt ceiling. All right, we've been talking about oil. U.S. crude oil inventories rose by 9.3 barrels in the week ended March 22, according to market sources. American Petroleum Institute figures on Tuesday. Distillate inventories rose by 531 barrels, but gasoline stocks dropped by 4.4 million barrels. So there has been a little bit of drop in the oil prices this morning. I have not looked at gasoline prices. Official government data will be published on Wednesday at 10:30, so we have not seen that yet. The Organization of Petroleum Exporting Countries and some of the allies led by Russia, known as OPEC Plus, are unlikely to make any oil output policy changes until a full ministerial gathering in June, according to OPEC Plus sources. Yeah, so I don't know they've made any statement beyond the end of March. I don't remember seeing that they made any statement on that, but we'll see what happens there. So oil prices, of course, something we've been talking a ton about. Now, since we started the program, Tesla has broken into the red, is now at 176.18, down $1.49. And that means it is part of the half of the Magnificent Seven that are down. So you've got NVIDIA down 24. So NVIDIA down strongly. Meta down 463. And then the rest of the Magnificent Seven are up. You got the Cathie Woods completely mixed, half green, half red. And you've got the Dow Jones up 308. You've got the NASDAQ up 5 now. It had been up much stronger than that. S&P up 500. I'm sorry, what did I just say? That was a little bit brain farty. The S&P is up 20 percentage basis. These are Dow Jones up 76, NASDAQ up just 0.03%, and the S&P up 0.39%. So the NASDAQ in general is starting to fade towards red, and Tesla is leading the way on that, now just down $1.36, so improving a little bit, Meta improving a little bit. Anyway, let's go ahead and take a look at the bonds. We've got the bonds this morning. By the way, there's something wrong with the app this morning, so I can only give you the 10-year. The 10-year this morning is down 0.8%, 0.8% of a basis point. So almost 1 basis point at 4.226. So nicely under my 4.25, which is kind of my breaking point. That I feel like that's a place where there's resistance in both directions actually right now. We have got oil down, as mentioned, down 57 cents, but still at 81.05, well above that $80 break point. And you have got now Brent, still $4.50 about over the Texas Intermediate. Got natural gas down 3.52% this morning at $1.72. You've got the dollar still just kind of hanging in there. Not a lot of movement this morning. You've got gold up $13 at 2,212. So that's strong, very strong, up near its high, all-time high. You have copper down this morning, but down 0.44%. You've got the Bitcoin down 461, sitting under 70,000 again at 69,295. All right, and going back for that last check we do on Tesla, down $1.40 at this point. All right, so yesterday, Brian White, we did a quick tour. I called it potpourri around, not going factory to factory, but going subject to subject in the Tesla world. If you missed it, you should go back and check it out. I'm going to remind you with the card right here. And then we also, again, to remind you about upcoming today, you've got Scott Walter. You don't want to miss Scott Walter. He's on probably right around 11 o'clock. And then 11:30 California time. And then Jeff Lutz somewhere around 4:30, 5 o'clock. All right, California time. All right, those are the kind of stuff you want to be looking for later today. That's why you hit the notification button. And then you go from there, you go to the description below, and there's a little thing called Patreon. And you go, yeah, Randy, I've been watching you for months now. I watch you once or twice, maybe even sometimes 3 times a day. I know it's a lot of work. And yes, I can afford the $3. So you go down to Patreon, you hit Patreon, you go over to Patreon. It just takes a minute. You sign up, and then once a month, they'll tap you for an entire $3, which almost all of you can handle that $3. Okay, it would be a great help to the channel, believe me, and I would appreciate it. Okay, and that's all I got. So it's been great talking to you.